Hello there, Mavericks. It is almost the end of April. Nice to be here. This is Rob Reinbold, and let's jump into the market. In this session, we're going to be talking about the news of the day, what's been moving the markets. We'll look at some commodity prices. Gold continues to come down from its recent high. Then we're going to take a look at the markets, the internals, and then I've got three setups for you: one bull, one bear, one sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, another boring day compared to all the days we've had over the last couple of weeks. So we have some optimism over the tariffs. There've been some changes on auto parts where the tariffs have been reduced or sometimes dropped altogether. That happened yesterday, and it's giving people some optimism. We also had some slightly better than expected earnings. Coke was okay. Honeywell was pretty good. Pfizer pretty good. So as you can see, it's just generally a little bit bullish, but that didn't really translate over into any sort of big rally. The Dow was flat. The S&P was up 0.5%. Qs were flat. Russell up 0.5%. So look, not a real exciting day. Oil got hit. That is one sector we continue to like to the short side, which is oil and energy. And you can see gold coming down, but not all that much. Gold is just having a pullback from a recent high. Advanced decline line, we had 2 stocks up for every 1 stock down. So this was not a really bullish day, but it was a general bullish day. And take a look at how many stocks are now above their 50-day moving average. About 3 weeks ago, this was like 18%. Very extreme levels. We're now coming back to more of a neutral area. When we take a look at the charts, neutral is the name of the game. Here we are, we're above the 20-day moving average, we're below the 50-day moving average. We also have broken above this last swing high. There are definitely some things telling us that this downturn that we saw starting in February is over. Now look, we won't have any confirmation until we get one thing: a clear breakout, a retest, and a move. Or a clear breakout, a base, and a break higher. We need one of those two things to really tell us that it's now more of a bullish market than a bearish market. We would also really like to see these moving averages start to turn higher. That hasn't happened yet, but there's definitely some signs that this market is more bullish than bearish at the moment. And we've seen it in the candles for the last week or two. Just definitely bullish candles, more so than bearish. If we take a look at the Qs, large cap tech, they're bouncing even harder off the bottom. So they're a couple days over that line, running into that 50-period moving average. We'll wait and see what happens. I talked about how this week we have lots of news, but the news really starts on Wednesday. So tomorrow we have PCE price index, and then Friday we have the employment report. I said at the end of the week, we're going to know whether or not we broke out. Because we could easily be poking our heads there. Bad news, we could easily get a candle or two down, and then all of a sudden, we're now just saying we're still in the range. We're still in the recent range that we've been in. We'll have to wait and see what this market does. The heat map you can see really just mixed here. Some nasty areas, some semiconductors had some selling. That really was about it, where we saw some intense selling. Last week, we moved up from a -3 to a -1, meaning, hey, you can't be as bearish. We've been talking about that really for the last 2 to 3 weeks, ever since we got this capitulation low with the VIX spike above 40. We've gotten less bearish already. Nothing yet to tell us to be bullish. That being said, I've got a bull for you. I got a bear. I got a neutral here on trades. I don't see any really fantastic trades and trends. Yes, there's some stocks that are looking decent, but I can't say that I really love this opportunity as a trader. I think you should be, patient, waiting for this market to really show a strong direction, because right now we're not really getting much of anything. On the long side, I had this on my list last week. This is ROL. I've never traded this stock before. It's called Rollins. I believe it is in the industrials group, a sector that I like quite a bit. And just a nice high base here. And you can see it's breaking out. We did have an earnings report where we had some selling, but the buyers rushed back into it. And here we see a breakout here of 56. This stock only has monthly options, and it does have a 57.50 strike price. So I think the only trade you can make here is at 55, 57.50, all the way out to May. I think that's the trade. It's basically trading right in the middle. So this is probably going to cost you $1.30, and then you'll have $1.20 upside. So basically a 50-50 trade with almost a 1-to-1 ratio on ROL. If you don't like this one, go check my other stocks on the list because there's lots of great stuff here. BJ's looks great. Consolidated Edison looks great. There's just some really decent setups here. Nothing like I think has a big push of the market and the sector behind it. They're just individual names that look pretty decent here. In the sideways one, here is Intuitive Surgical. One time I made a mistake of calling it Interactive Surgical, and one of my traders said, Rob, that's the one thing you don't want to be interactive with your surgery. You want to be asleep. And I said, you make a good point. Let's talk about this move, this range here. We've got a clear range down here. We had earnings. Earnings gave it a little bit of a boost, and it's putting it right back up into the top of this range. In this market, we're seeing lots of stuff doing exactly what the market's doing, which is pushing up against a 50-day moving average. Big question is there going to be this breakout to the upside, or is this going to be more, hey, it can't really go higher? I don't think this one is going to go back down to these lows that it had before earnings. I do think it's going to hang out in this area. If you're looking to just make a trade for this week, a butterfly, I actually like the 500, 520, 540 butterfly, which is slightly bullish. That'll be a slightly bullish butterfly, meaning if it goes up 1%, that's going to be in the perfect range here for you. I think if you're going to go out to the next week, this does have weeklies. I think I would rather do the 510, 530, 550. Make it a little bit more bullish. The market's kind of telling us that it wants to go a little bit higher. I think we want to be up in this area. That's probably the profit area we want to be in, which is closer to the 530 area. But you're going to need to give it at least another week for that one on that target. And on the bear side, this has been on the list for a while. This is Newsmax. Newsmax is a recent IPO. I actually had to chop this chart down to even get any sort of scale of this little move here. It opened up at 80 and plus on its IPO price. You can see here, for the most part, we're trading between a low of about 21 up to about 25. I think this one is ripe. This one's got lots of options available. For me, 23.22 is a very low risk. I shouldn't say low risk, but it doesn't need to move much. You'll probably pay about 60, 65 cents. That means you're going to have about 35 cents of upside, but you're going to have a good win-loss on this one. If you want to get actual bearish here, I think if you're willing to go out to the May expiration, I like the 23.20 bear put spread. I think 20 is probably where this thing is headed next before it takes a bounce. Let's talk about tomorrow. The top of the range of 5,500 is being pushed. I think we're going to stay up at the top end of this range. You know, we closed at about 55.50 today, so technically we're above that 5,500. But remember, these are ranges of resistance, not an exact number. What we need to see is the confirmation. And I think that comes Friday with the employment report. We do have some pretty big economic reports tomorrow. We have first quarter GDP. Expectations are for plus 0.4%. So not negative, like the Atlanta Fed projected in late February, but still not a great number, but not a negative, which what we've gone through is actually kind of a win. We also get the PCE price index, which is the Fed's best inflation measure. That comes out at 10 a.m. If we get a decent print on GDP and we get soft PCE, which the PCE has been soft lately, we could see a pretty decent move out of this 5,500 range tomorrow. I think we're going to get more of a mixed report. We'll have to wait and see, where I think it basically just hangs around this 5,500. I think we're going to have to wait till Friday to get that employment report, and then we'll either break out and hold, or we will go back down into the range, and it's going to tell us exactly where to go. In addition, these next 2 days are huge for earnings. Tomorrow we have Microsoft and Meta, and on Thursday we have Apple and Amazon. So add that into the mix. Just think of all of the explosive news we have coming up over the next 3 days. That's why I think just wait 3 days. Just wait 3 days. You're going to have a much better idea of where this market is going when it's hitting up against this 5,500, because I think with all this, there's like a powder keg of information these next 3 days. I think we're going to see an explosion one way or the other. It's going to be very clear which way the market goes. That is it for the Market Roundup. Thanks for joining me. Goodbye, everyone.